Okay, is that live, Jaden?
Yep, that is live.
Perfect. Okay then. So I was asked to do a slot basically for the introduction to bookkeeping level, the level 2. Now, I know some people may think that this is quite a low level presentation. However, I think it's quite fundamental, because what we've noticed with students at the minute is that they're learning things parrot fashion, and what we want to do is work with the AAT and get these skills that you need to be able to use them in the workplace. So we don't just want people to pass exams, we want them to have a future in either bookkeeping or accounting. And that's why I thought this was quite important to start on. There's a lot of people currently on their AAT journey now, wanting it, whether it be a change of career, etc. So please, any questions, just ask us, and Jaden will let me know as we're going along. Okay then, so what is an asset and what is a liability? Now, in business, there's a reason why we need to show these separately. So basically, an asset is something that the business owns or is owed. Okay, so whether it be a motor vehicle, a computer, whether it be photocopy of paper, it could be money that's owed to them from their credit customers, it could be money owed to them because they've got a balance in the bank. So think about it as, what has the business actually got that they could physically cash into or change into money when they need it. Okay, so keep that in mind. A liability then is something that we owe to others. Okay, now obviously this is important because we need to make sure when we talk about assets and liabilities, we want our assets to be higher than our liabilities, because if not, then the business is basically not cash fluent. It's not got the ability to pay off its liabilities. Okay, so when we talk about liabilities, we talk about what we owe to others. So this could be your suppliers, it could be inland revenue, anybody that you owe money to. So again, although we're just talking assets and liabilities, think of it logically. Don't just think of what a definition is, etc. Because in the workplace, you don't need to really know the definition. You need to know how to deal with it. Okay then, so there's what we call non-current and current. So we're going to talk about assets first. So a non-current asset is something that lasts longer than a year. So it's long term. So for instance, if you've got a computer system, that's going to hopefully last you longer than a year. It might last 3 years, 5 years, whatever, but it's going to last longer than a year. However, the cartridges you put in, your printers, etc., don't last a year. So they're not part of the non-current asset. So a non-current asset, something that the business owns and it lasts longer than a year. It's used within the business. Okay, so for instance, if you are a car sales or van sales and you're selling cars, but then you've got the ones that you actually use within the business, they are non-current assets, but the cars that you sell to customers aren't. Okay, so it's got to be used within the business to generate trading income, etc. It's what we call depreciated. So if you, for instance, bought a new van and the van cost £30,000, if you entered it into the accounts incorrectly, it could have an impact on your profit, which means that your profit would be reduced, your tax would be reduced, but you've dealt with the asset incorrectly. When we capitalize assets, we depreciate them over a period of time, and this is what we call the useful economic life. So how long we think it'll be used for. So quite a lot of businesses might depreciate it over 3 years. Okay, so the depreciation is taken off the cost to get what we call a net book value, but that's going on further down in your studies. But that's the reason behind it. So when you're at work and somebody says, well, how are we going to, write it off against profit? It's done through the depreciation. And that's why we don't put the full vehicle through the P&L account. Okay, then, so current assets. Current assets should be easy to convert to cash. Okay, so this is things like, if, for instance, you needed to get some cash in, the first thing that you're going to do is you could try and sell your stock, your inventory. You could try and get your customers, your debtors that owe you money to pay. Okay, so it's things that are easy to turn to cash. Now, what we do is we'd put them, when we're talking the financial statements, we put them in what we call order of liquidity. So the hardest to turn to cash would always go at the top and the easiest at the bottom. So the easiest at the bottom of the list would be obviously cash, because cash is physical cash. You've either got none or you've got some cash, you've never got negative cash. It's what we call short term. So the value changes constantly. So your stock value, for instance, if you're working in mobile phones, you're not going to have the same value of stock in an hour if you then go and sell 20 mobiles in the next hour. The value is going to change constantly. Okay, so it's short term. That's why it comes under current. The values are changing regular. So whether this is your stock value, whether it is your bank account value, whether it is your debtors. So we'd hope that debtors will pay us and then we'll get other debtors. So the values constantly are going up and down. So it's really important that we're aware of where they fit within the financial statements. Then we've got what we call non-current liabilities, okay? So these are things that are long-term. So there's not really many of these. So I suppose really a bank loan, but a long-term bank loan. So anything that is over a year. So, if you've got things like a commercial mortgage, for instance, if you've got a mortgage on your premises, that will be long term. Okay, so non-current liabilities means that it's over a year and it's going to be paid off long term. There is things that we have to do as we're paying the liabilities off, like if it's within then a year, it moves to current liability, but that's as you go further down in your studies. But that's why it's important to understand what I'm explaining now, because it all links to as you carry on studying right up to including level 4. Okay, then current liabilities, similar to current assets, but this is money that you owe in the short term and it's got to be paid within the year. So for instance, a bank overdraft, that could be asked, the bank could ask you to pay back an overdraft at any moment in time. Okay, so if you've got a £5,000 overdraft and the bank wants the money back, basically, then that's short term. If you owe money to Inland Revenue, they're not going to wait long term. It's going to be a short term debt. Okay, so you're going to have to pay, especially things like VAT and your payroll, etc. Okay, so anything short term where it's got to be paid within a year is what we call current liabilities. Okay, and it's really important to understand this because the non-current assets, non-current liabilities, current assets, current liabilities are shown on what we call the statement of financial position, which is what we'd used to call the balance sheet. But it's really important that they are dealt with correctly, because otherwise you're going to under or overstate your financial statements, which then won't be very good if you're looking at investors or anything. So it is important that you understand how these work. Okay, then, so I'm going to go through them, and then if you can put in chat, or if you want to have a guess, then we'll see whether you've got it right or wrong. So we're going to deal with non-current assets or current assets. So the first one is inventory. Where would we put it? Where would it fall under?
Okay, so just to repeat that is inventory. I'll wait a few seconds just to see if anyone knows, but that is inventory for either non-current or current assets.
Inventory is just a
Okay.
posh word
Yeah.
for stock.
All right, so we have got a few that's come through. So Zoe has said current assets, Becky has said current, Gina has said current, James has said current. I think everyone is,
Yay!
everyone's saying current.
Fantastic. Well done. You can all have a lollipop for Halloween. What about motor vehicles then? So these are vans that we use within the business.
Okay, once again, that is motor vehicles for non-current or current assets. Okay, so Richard said non-current, James said non-current, Vanya said non-current, Gina said non-current, Baylor said non-current. Everyone has said non-current.
Fantastic. Well done, everybody. Okay, then. So the next one's white. I don't know why I chose the White House, but I'm classing it as a building. So I'd like to think that this has got some value to us.
Yep, I hope so. But so just to double check, so that's buildings, right?
Yep.
Okay, buildings for non-current or current assets. So I believe they are saying non-current. Sarah says non-current. Richard says non-current. Zoe says non-current. Yeah, everyone is saying
Fantastic. Well done, everybody. Okay, what about cash then?
Okay, cash for non-current or current assets. Okay. Current. So Becky says current, Richard says current, James says current, Heather says current.
Excellent.
Yes.
Okay, let me just say something though regarding the cash, especially when you look at the petty cash unit in this. Yeah. Petty cash and cash can never ever be negative. So it can never be a current liability, it can never be a credit. Okay, so cash will always be a debit. So whether you're doing assets and liabilities like this or whether you're doing the petty cash, the balance brought down on the cash will always be on the debit side. And if you have got any cash, it will always be under current assets. Now, I've seen so many students lose valuable marks on that. So please just bear that in mind. It's just for you to remember as you're going along with your studies. Okay, then. So what about debtors, also known as trade receivables?
Okay, so that's debtors or trade receivables for non-current or current assets. Okay, so current, Heather says current, Richard says current, hopefully. Sarah says current, Sunira says current, Crystal says current. They all say current.
Perfect. Okay, yeah, current. Okay, what about the bank account?
Okay, so that's the bank account for non-current or current assets.
So when I mean bank account, I mean that we've got some money in the bank.
Okay, money within the bank. Okay, Richard says current, James says current, Leilama says current, Sunira says current.
Perfect.
Oh,
Well
some
done.
said non-current, but yeah, I think everyone mostly said current.
Okay, and the last three then, we've got equipment, we've got office furniture, and we've got tools. They're all going to be the same. So are we all agreeing on non-current assets? I'd like to think so.
Well, I would presume so, but we'll see.
Yeah.
Yeah, that's right. Yeah, non-current.
Perfect.
That is correct.
Brilliant. Well done, everybody. But like I said, the reason why that's important is because if you put those on a P&L, for instance, it's going to have a real impact, especially things like your building, your non-current assets. It's going to have a real impact on your profit. Okay, so businesses need to see a true and fair view. So they need to know that everything's accounted for correctly. Okay then, so let's just quickly then go through non-current liabilities and current liabilities. You'll see with this one we've not got as many because obviously we're quite limited on liabilities. So what about money that's owed to HMRC? Is it a current liability, current or non-current?
Okay, so that is money owed to HMRC for non-current liabilities or current liabilities. Okay, so Fiona says non-current, Richard says current, Sarah says current. Okay, yeah, I think they are mostly saying current.
Okay, yeah, it's a current liability because this will be things like your VAT, PAYE, you know, the employers and employees' national insurance, income tax, student loans. So student loans are deducted from wages and sent straight to HMRC. Now, if anybody else said non-current, you'd be correct if you've got, say, a long-term payment plan with them. Now, I've known this happen in business where, you know, we are collector of taxes. We collect the VAT on behalf of HMRC, and some companies forget that they've got to pay it over. So if they've spent the money rather than put it to one side, they may then have a long-term payment plan with HMRC. So, but that's very, very, you know, it's very rare. The HMRC will want their money back as soon as possible. Okay, then what about a business loan?
Okay, so that's business loan for non-current or current liability. Non-current, non-current, non-current. Someone has asked what are the terms of it?
So as you see at the bottom, one says short-term loan and then one says business loan. So I'm going long-term. But well done.
Yep.
Who asked that? They're brilliant, them, Jaden.
So it was Richard Owen that asked that, so definitely
Richard, well done, Richard. So it's long-term, so it's a non-current liability. Okay. Now with this one, and this is just as you go on with your studies, so I know I'm probably taking you on to level 3, level 4. When the business loan, say it's for 10 years, but when it gets down to the final year, that will then move into current liabilities. Okay. So it's only long term until it gets to a year, less than a year, then we move it over to current liabilities. So it's quite important that you're aware of that for when you move on with these studies. Okay, then what about a bank then? We've got no money at bank, we're overdrawn.
Okay, so that is the bank. So you're saying overdrawn, sorry?
Yep, overdrawn, overdraft.
Overdraft, and that is that non-current or current liabilities? Current. Just gonna wait to see, is anyone else here? Yep, current. I
Current,
think everyone
brilliant.
agrees current, yeah.
Well done. What about creditors then, or also known now as trade payables? The terminology keeps changing, so.
It's good to know both. So
Yep,
creditors or trade
trade
payables.
payables.
Okay, so I'm seeing current. I'm just making sure that it's not coming from the previous lot. But yeah, no, current liability, current. Yeah, I think they are
Fabulous.
saying current, yes.
Excellent. And also then, if the business loan's long term, the short term loan has got to then be current. Okay, so short term means that it's going to be paid within a year. Sometimes in business, it is better to get a short term loan rather than an overdraft because sometimes it's cheaper, especially with how the interest rates are and everything at the moment. Okay, so really well done on that, everybody. That was fantastic. And it's important to remember it so that when you're going on with your studies and your employment, you understand how it works and why we do it that way. So everything we do has an impact on the financial statements. Okay, so I just want to take it a little bit further now, because this is an area that students tend to lose valuable marks on when it comes to level 2, especially introduction to bookkeeping unit, because it's really the first one that you're studying. So taking on the assets and liabilities, we now need to look at how we deal with them. So when I've talked to you about the financial statements, that tells us whether we class it as capital or we class it as revenue. Okay. Now, don't think as revenue as sales. You need to think outside the box really a bit with this one. So basically, capital income. Now, when we test you, we want to know that you understand, one, what was the item before and how did we use it? So once we've sold it, what happens then? It doesn't just become a sale in the accounts, because if it's a capital income, it's not a sale. What it is it's items that the businesses have used, but we've sold them. So if we've got a motor vehicle and we sell it, that motor vehicle is a non-current asset to the business, and we originally capitalized it as a non-current asset. So if we sell it, it becomes capital income. Okay, so it's money that we're receiving as a business through the sale of our asset, our non-current asset. Okay. Capital expenditure means that we've bought something to be used within the business. Now, that's really important, okay? It's got to be used within the business to be classed as capital expenditure. So if you're trading in your old vehicle for a new vehicle, that becomes capital expenditure. If you're buying new computers, capital expenditure, okay? But then when you sell those computers, it becomes capital income. Okay, really big difference with this. So just be careful. Don't let the examiner trip you up, because we like you to read it wrong, really. So make sure your RTFQ, read the flipping questions carefully. Okay, then we've got the revenue side of it. So we've got income. So we've got income coming in. So revenue income is money coming in from trade. So if you're selling mobile phones, it's the sale of your mobile phones. Okay. If you're working in advertising, for instance, and you sell advertising, it's the money coming in from advertising. Whatever your trade is, that is where your income comes from. Revenue expenditure then is day-to-day running expenses. Okay, so everything that we need to be able to run a business. And I don't mean that you have to spend it every day. I mean that it is just an expense to the business. So wages, light, heat, rent, insurance, motor expenses, and so on. Okay, and the reason why it has to be different to the capital expenditure is one is entered on the statement of financial position and the other is entered on the statement of profit and loss. So an example for this one is if you have bought a motor vehicle, yeah, the motor vehicle becomes capital expenditure and is recorded as a non-current asset. If you put fuel into that vehicle, that becomes as revenue expenditure. It's a day-to-day expense of running the vehicle. Okay, because I've never known a vehicle yet where the fuel lasts longer than a year. Okay, so you wouldn't capitalize it. It'd be fantastic if it did, because we'd all save a fortune, but it's not the case. So when we talk about revenue expenditure, it's the day-to-day money that we spend on running the business. Revenue income is money coming in from the trade income. Okay, so let's just have a quick look at this just to finish off. Okay, then. So if I'd got a motor vehicle, okay, so I've bought some motor vehicles. Where am I going to sit it? Is it capital income, capital expenditure, revenue income, or revenue expenditure? You can just put CI, CE, RI, or E. You don't have to type it all out.
All right, yep, we will Wait for a sec just to see what they think. All right, so C capital expenditure, CE from Karen, CI from Gina, CE capital expenditure seems to be
Perfect. Yeah. So we're buying the vehicles to use within the business. Okay. If again, like I say, I was I don't know, say I'm a van salesperson, okay, that would then go under revenue expenditure, but it's not, it's what we're using within the business. Okay. Right. What I've done though is I've sold one of the vans. So what would that be classed as?
okay. So sold one of the vans. What would this now be classed as? Okay, so CI, capital income, capital income. Yeah, I think, yeah, everyone is saying capital.
Perfect. Fantastic. Okay, then. What about paying rent? Rent paid.
Sorry.
What about rent paid? Jaden's just taken got door, bless him.
Apologies for that.
It's all right.
Yeah.
Rent
But
paid then, Jaden. Have we got any response?
yeah, RE, everyone's saying revenue expenditure, revenue expenditure.
Perfect. Well done, everybody. What about motor expenses then and wages? Motor expenses, wages, light and heat. They're all similar, so where are we putting them?
Yep, motor expenditure, lighting and heat. Let's see. Revenue expenditure, RE, revenue expenditure.
Fantastic. Amazing. Brilliant. Okay, then. So what about sales?
So that is sales. Let's have a look. Sales, RI, revenue,
Perfect.
income, revenue, income. Yeah, all right.
Fantastic. What about rent received? So this could mean that you've got, you know, a premises, you've got a spare office, and you might rent it out, but you're receiving the rent in. So what would we put this under?
So that's rent received. Let's see. Oh, okay. So RI, CI, revenue, income, capital income. Oh, revenue income. We're getting a few different answers here. Revenue income,
Perfect.
capital. Yeah. So
yeah, it's classed as revenue income because it's not like you're selling anything, so it can't be capital income. So you're not selling the building. What you're doing is you're renting out an office space, which is regular revenue coming in. Okay, so capital income's quite specific and normally a one-off, where rent received is a regular income coming in. Okay, and then we've got office expenditure, which is when we're paying for things like, whether it be, I don't know, computers, desks, chairs, etc. And then the final one, then we've got, it's not White House this time, it's another building. Where we're going to put this final one?
all right. So buildings. Finally, where would this go? So that's CE, capital expenditure from one person. Let us see if anyone else has got CE. CE.
Perfect.
Yeah.
See, they're just amazing, our AAT students. Okay, so basically it's just an overview of assets and liabilities, capital versus revenue and the importance. Now, what will happen is with your studies now, you'll move on, and when you get to level 3, for instance, this information is crucial to carry you on to level 3, as well as obviously past level 2. So that's the end of my presentation. I will now stop sharing my screen.
All right, and then pass back over to myself.
Hey,
Alrighty.
it worked.
Amazing. So yes, that was an amazing session. I would like to thank both Sam and Premier Training for delivering this top-notch study session. Sam, is there anything you'd like to add or promote business-wise?
No, if you like I say, if anybody's wanting to, get in touch with us when we're interested in distance learning, our course advisors are here till 8 o'clock Monday to Thursday and 5 o'clock on a Friday. And we do offer tutor support on a Saturday mornings as well. So please, don't study alone, and don't worry about your studies. There's always people that can help you. So yeah, and thank you to AAT for having me back.
No worries at all. Many thanks. But yes, I would like to thank everyone for joining and being a part of this Facebook Live. Do remember that these sessions are recorded, so you will be able to rewatch this live both on Facebook and on YouTube within the next couple of days once, it's being processed. For additional content, news, and memes, you can follow us on Facebook, but you can also follow us on Instagram. Our handle is at Your AAT. You can also find us on LinkedIn, Twitter, TikTok, and yes, we're still on Threads. But yes, I would like to thank you all for joining us. We'll see you again soon. Bye for now.
Thank you.